Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great Friday. We've seen like this relentless selling in the dollar today. I don't know if it's just kind of end of just maybe some flows that are passing through, but the dollar for the most part has been under some pressure. I just want to let you guys know, if you're not in the chat room, I did sell some Aussies up here. I sold it at 42. I'm still playing into this longer term head and shoulder pattern. So as long as we trade below 78 cents, I am looking to be on the short side. Now, I can't ignore that we had a little bit of a false breakdown yesterday, but I'm also looking at this. We've done it a couple of different times, right? So instead of looking at it as a false breakdown, you kind of have to look at it as more of a just a descending trend line, or maybe a descending neckline, and just not a I want to point out we've had a false breakdown here. Like if you think about this, right? You had a false breakdown here and a rally. False breakdown here and a rally. But I think eventually it'll give way because, I think this has more to do with equities versus in other assets. Can you guys not hear me?
No, I can hear you, Blake.
You can? Okay.
Yeah.
When did Mapako said no sound? I'm going to respond.
He needs to check his Zoom settings, basically. I'll respond. Don't worry, I'll respond.
Thank you. Okay. All right. Thank you. Appreciate it, Stel. So going back to what I was saying, I still think that this head and shoulder pattern can play out. And I think the reason why, the Aussies rallied off of the support is because of what's happening in equities. Equities are still holding above, the S&Ps are still holding above 4110, which is really key support, right? But we're starting to see a breakdown in Bitcoin today. We're starting to see cryptos really pull back. And I think that's the bigger risk for the market right now. I do. And so I think people that are selling dollars might be a little, a little premature at this point. Okay. So let's go ahead and write down this with the bias chart. So as far as the Aussie goes, and I know some of you guys are like, oh, Blake, you've been showing your video camera. I'm not going to show you my video camera at 6 o'clock in the morning because you should see my hair right now. I look like,
that's what we want. We want to see your hair.
No. You got to see what I look like. I look like this guy.
Stop explaining and show us.
No, but seriously, this is what my hair looks like right now. Right there. Like that guy. Maybe more like that. That's kind of like what my hair looks like right now. So so before taking a shower, I early in the morning, I'd rather not share my video with you guys. I don't mind doing it during the roundup because I've then gotten ready for the day. But yeah, this time in the morning, only a few select people that have been married to me for 20 years get to see that, actually. And Steve.
Hey, I'm married to you for like 6 years. Does it count?
Oh, we have been married for like 6 years as business partners. And same with Stelios too. I tend to prefer my third wife Stelios more than you, though.
I know.
To be honest.
Know it, baby.
The Telly Savalas of the company.
All right. Well, let's get to this. So with the Aussie dollar, so the 618 comes in at 77.67. I do think that's going to be key resistance. If you are, just trying to be a little bit more patient, maybe you could, right after the open, we might get a move up towards that 77. I'm just going to round it out to 5. But as you guys can see here, you know, obviously key support now 77 cents, but I'll write down 76.90 because we did probe a little bit yesterday. So 76.90, we're still range bound. Let's go over to the S&P. So I want to explain about the S&P and how important the support is. You can see, you know, even yesterday, sell off, you know, we came close to 40, you know, 41.10, which, as you guys know, is really like kind of the important support here. But it's actually looking like it might not even be 41.10. Maybe it's more, you know, right here at 41.20. So I'll write down 41.10 again, but that seems to be resistance, or excuse me, support. Previous channel, you could probably draw it like this. Pretty damn close, right? So draw it like this: channel support, channel resistance, underside of channel holding. That comes in at, let's just say 41.80. That's resistance. And remember, we're still bullish here, but you know, we break through 41.10. I'm gonna put an asterisk there. That's when things get a little bit bearish. So here's the euro, almost at 121. 121 is the 618. And support right now is going to be 1990. You know, same support as yesterday. And resistance 121, and that's key. I also think this is key, believe it or not, because I think if we break below 1990, you can see all the little arrows there. We break below 1990, it is going to be key support. Okay, they'll bring in some sellers, and I also think this is key resistance. It's the 618, and frankly, if we break above 121, or you know, more importantly, like this trend line, we're going to go back to 123. So I think both of these areas are really quite critical for this week's range. You know, what happens. And don't forget, we did have the ECB yesterday. You know, the euro came down post ECB, and we rallied back. So anyway, cable. So the cable, actually, if there's a currency right now, and I do not have any pound exposure right now. I do not. But if there's one currency that's not looking too hot, it's the cable. It's not. And the reason why I say that, let me just recap. Double bottom. Double bottom, breakout, false breakout. Everybody who's bullish said, holy shemang, and then we started to sell off, you know, after the bulls got stopped out. Now, the fact of the matter is, when the dollar rally or the dollar sells off and the euro rallies, the cable's not even playing catch up. So the bigger issue is, in my opinion, is if we take out these lows right here, you're going to see a lot of people get, like, you know, all the bulls are going to get stopped out then. And this is where I really, you know, start to trade aggressively short. I'm probably going to start shorting the sterling soon, and then, you know, look to add down here. I haven't touched it yet. I'm just telling you guys how I'm feeling about it. So today's support, 618 retracement, comes in close to this trend line. Is going to be at 137 or 138. I know we talked about all this yesterday, but it still doesn't mean that we can't recap. Oh, by the way, did you guys see that video that somebody had brought it up yesterday about my last day at Wise trade, and the video? Did you guys? Oh, it was Alex. Yeah, Alex, you brought that up, and you know what? It was interesting. Grega said, Blake, I missed. Oh, he's going to be on here shortly. He's like, I missed it. I wanted to watch it, and he watched it, and he had some comments and kind of laughs about it. But if you guys haven't seen it, it's actually I went back and rewatched it, and although the video quality is really horrible, I'm like, man, I gave some really good advice back then. If you guys haven't seen it, you guys should see it too.
What did you say? Buy cryptos.
Buy crypto. I'm like, man,
when they
cryptocurrency is the
become a
next
thing.
best thing.
Yeah.
No, it's all the trading tips where it's like I kind of condensed it into one day, a lot of trading tips into one day, and I was like, man, those are all it's all the stuff that stands the test of time. So
if you didn't say buy cryptos, it's just worthless.
Yeah, that's true. That's true. Good point. I know Greg is going to be here, so I should probably just I should get this all together. Resistance, like I said yesterday, is 139.50. I believe that's the number I wrote down. I haven't looked, but I'm pretty sure it is. Let's see. 139.50, 138. What I write here? 138, 139.50, 121, 119.90. Oh, it's all the same. 76.90. This is different. 76.90 and 77.70, 77.65. We just narrowed it down just a bit. Okay, well, let's go over to the Kiwi. Let's see what we got with the Kiwi. I mean, I don't know how much is really changing here. Ascending channel, 71 cents. And I think we talked about this yesterday. We could still make it to 72.60. I think that would be a real, like a layup short there, but so I'll write it down. 72.60, and then is Grega here? 71 cents, because I'm going to make this really quick.
I don't think he's yet, so don't worry, mate.
He's here.
Oh, he is?
Yes, I'm here.
Oh, hey, Grega.
Ah, shit, he's here.
Hey, watch your language.
Yeah.
Earmuffs, kids.
Steve, you already talk too much anyhow, so.
True.
All right,
Nobody can deny that.
I'm going to wrap this up. All right, so because nothing's happening right now. We did dip a little below that 70 support, but we're still holding up. And Greg, I got something to talk to you about from the chat room. Before I let you take over. But anyway, 124.60 and resistance at 125.30. And if you guys keep wondering, 125.30. If you guys keep wondering, wow, why is the Canadian dollar so strong? Don't forget, the Bank of Canada met this week and they are tapering bond purchases. The only way the dollar Canadian is going to go higher, and I'll say this again, I'll say it again and again, is if stocks really start moving lower or crude like implodes, right? So just keep that in mind. There are really the major thing that really moves currencies in all actuality are interest rates and interest rate expectations. That's what cements a trend. So when you start to see the Bank of Canada is actually tapering bond purchases, that means they are one step closer to actually raising rates, which that doesn't mean they're going to raise rates anytime in the near future, but that shift in monetary policy is really going to offer some overall support until we see some other central banks, taper as well. All right, dollar Swiss, 92 cents is really holding. I know yesterday we wrote 92.15, but I'm going to have to actually just write 92 cents. 92 cents and 91.15 is a 50% retracement. Okay. Also right here is just below would be some previous supports down at 91 cents. So I'm going to write down 92 cents and then 91.15. I could actually keep this more bearish while we're below 92, I think. Dollar yen does not look healthy. And I know we've talked about this. Now that we're below this 82 or 80.35 support now would be this channel support, which would come in at 107.25. So And, you know, we could put this one in range. I think that's, well, I don't know. With the yield starting to slide, I'm going to keep those both in bearish for now. Dollar index, same as before. 90.80. Resistance at, now it's 91. Now it's 91.42. This is key. It's a 618 retracement. That's why I'm going to put an asterisk next to it. Dollar Mexican peso. Oh, damn thing's still trading heavy. Support right now is at 1978, as it was yesterday. I think we wrote down 1978. We might have wrote down 1980, but, or 1977. 78, okay. And resistance is obviously 20. Or 21. Okay. US dollar, Norwegian krona, still, I think the only reason why this thing is trading as heavy as it is because, you know, stocks have been holding up, but we'll see what happens here. 831 or 830, 840 needs to be broken in to see it move up a little bit. So 830, 840, and we'll put that as an asterisk. And I'm still in the false breakdown camp, but you know, it's obviously trading a little heavier right now. So gold, silver, Bitcoin. Okay, so Bitcoin, as you guys know, I don't need to talk much about this. It is bearish at this point. I told you guys yesterday, if it breaks 50,500, it is bearish. We are holding below it. We've been holding it below it now for the last 8, 12, 10 hours. That's a sustained breakdown right now. So we did hit the 127% extension. So 47.5 is support now. That's 127% extension of the last move higher. 5,000 or 50,500 is now resistance, as that was support, and that flips to bearish. Actually, you know what? I'm going to write down that spike low, 51,500. That's what it's going to be. 51,500. Okay. Gold, silver, and then we're done. So silver, as you guys know, oh shoot, where is it? Oh, there it is. So silver, as you guys know, I've been writing down 2680 to 2380 for weeks. Then last week I started putting in, you know, 2630 because that was a 38% retracement. But after yesterday's price action, you can see how just important this is. Just these two blue lines right here are the range. So I'm just writing it down again because it's working. 2380, 2680, it's in a range. Gold. Now I got asked this question in the chat room, so let me address this right now. So I was talking about Bitcoin early on the F.A.C.E webinar, and Alan had asked, well, Blake, if Bitcoin sells off, what does that do to gold? And remember, we have this bullish pennant right here. It still comes in at 1805. So I'm going to, even though 1800 was resistance, big round number, I'm going to write down 1805, support at 1760. And let me just tell you guys right now, the anti-Bitcoin is gold. Right? So as Bitcoin comes down, we see, like even today, Bitcoin broke 50,000, gold went whoop, and it spiked back up. In a risk off environment, if we do actually get risk off, and we see Bitcoin breaking down, I think in that situation, gold is going higher. All right. So anyway, I just some food for thought regarding gold. Now I'm going to pass everything over to
Can we see
Grega.
the bias chart? Oh, yeah, thank you.
Yep, here it is.
Thank you, because you
I'm
switched.
going to pass it over to Grega, but I want to talk to him really quick about the Canadian yen, because I had a pattern in play and I moved the stops close to break even, then it hit. But he had written that he was looking at an inverted head and shoulder pattern. I'll show you exactly what he's writing, or he was showing in the chat room earlier, because he posted his chart. He was looking at this inverted head and shoulder pattern, and there's your head. I still look at it as a bearish triangle breakout. The only reason why the pattern in play stopped or got hit on the invalidation level is because I moved it. Because the original invalidation level was way up here, and I moved it to basically break even. But I still, personally, I'm remaining on the short side of the Canadian yen while we're below this intersection of these two trend lines here, which I still think points to a move towards 84. So, Grega, let me ask you this. Do you still feel that the Canadian yen is bullish here? Because I didn't see if you had any counts.
I mean, you also said that Bank of Canada is somehow turning hawkish, right?
They are. Well, I mean, they tapered bond purchases. I mean,
Yeah, I mean, so with that in mind, I think that CAD has been lagging compared to Aussie and New Zealand dollar for the last 2 weeks or so.
Yeah.
So I think that maybe it's now to catch up the gains here. And if I consider that stocks could still potentially be in a potential corrective setback here, maybe there will be a new bounce coming here in a risk-on environment. So that's what I will be looking for. But of course, even if it's head and shoulders pattern, I mean, it's not confirmed until the neckline is broken.
Right, exactly. Yeah, it definitely isn't. No, I was just wondering if you had some counts that complemented that.
Sure.
Short. And I still am looking short, and I hear what you're saying, but I'm also taking into consideration what cryptos are doing right now, and I know stocks are a little bit at the open, as they always are every time North America comes in, but I'm not falling for it. I'm kind of staying on the short side of these, and even with, and I have to point out, even with the Bank of Canada doing what they did this week, the dollar Canadian is still not going down, even after all that. So there's something to be said about that. Anyway, I'm gonna turn it over to you, so you can take some time and go over your charts. But I want to say thanks for being here, Grega. I appreciate it, and I want to say thank you to everybody here listening in, and continuing to be supporters of ForexAnalytix, and supporters of what we do. And I just want to say I hope you have a great weekend. Appreciate each and every one of you. I'm actually going to be filming a few things today for you. So if you don't see me in the chat rooms, I'm out working for you. So all right, guys, have a great one. And Grega, it's yours. And Steve and Stelios, you guys have a great weekend. Okay.
You do, mate.
Thanks.
So, Grega.
Okay, so since we talked about the CAD yen, this is actually what I'm referring to, right? So this is just the higher degree time frame charts. I mean, still, we had a very nice move up here at the start of March. So I think that now this could be a corrective fourth wave. Of course, there's always a chance that 38.2 could be retested. But if we really are going to see these head and shoulders broken, here it is, to the upside here, let's say that we suddenly rally into the close and we break 86.70, then I think that more upside could be in the cards early next week, and this could actually confirm that this fourth wave pullback is finished. But as long as this neckline is in place, and obviously this resistance line of this corrective channel, obviously wave 4 can always become more complex. So that's probably your key level, 86.70 or up to 86.80. Okay, also, even if you just look at the intraday structure here, notice that this was a very sharp rise, and this appears to be like a minor free wave setback. So that's why I'm somehow more bullish than bearish here, at least for the next few sessions. Okay, let's go to euro dollar. So euro dollar is still bullish, and I was looking for a reversal higher on euro dollar based on two different interpretations. Either this is going to be a free wave rise here for a wave B with limited upside around this trend line, which comes in around 1.22, or maybe is this free wave move actually become a 5-wave movement that will take us much higher for a wave 5. Well, what is very exciting is that both wave counts still suggest that we have room for more upside, because even if this is just a wave B with limited upside, well, wave B should be made by 3 subwaves. So if you look at the 4-hour time frame here, I believe that's an impulse, and that this wave 2 or wave B setback is still going to occur. So either this is going to be from near-term levels, or maybe after another jump higher, and then we see a slowdown, adjusting that more upside will eventually come after support. Okay, so that's the first support here that was actually retested at 1990, but even better is at 1940, of course, if we ever get there.
Yeah, for whatever it's worth, I'm with you.
Yeah,
I've been looking for more upside in.
Yeah, I mean, trend is looking very healthy here.
In euro, I also see the DXY's rebound to be corrective and over many days ago.
Yeah.
So I'm looking for new DXY lows as the most likely scenario.
Yes, and then you also have a lot of other currencies, like let's take a look on Aussie. I mean, this one is also looking corrective here.
Kiwi as well.
Yes, we will go to Kiwi as well, yes. So this was a very nice breakout after a retest of, I think that's a 100 daily moving average. I also talked about this in week ahead video, and looks like that this more upside now for a wave 5 can be in play. Also, let's not forget copper. I covered this 2 weeks back. This triangle is now decisively broken, so I think it's just a matter of time when we print again new highs. So further upside here is definitely positive for Aussie. Then you have dollar Chinese yuan. Again, this one looks like
rebound.
Yes, looks like it's ready to continue lower and retest this trend line. So again, this is positive for Aussie. And then you have also Hang Seng Index here. Maybe that's now this sector that could be very interesting if we consider that US stocks are quite high. Well, maybe that's where we are going to see a next volatile move to the upside, and this maybe could somehow help to see Aussie's trend here as well. So overall, I think that Aussie dollar is positioned quite well. Let's not forget on metal prices. If we take a look on gold here, we keep rising here after we reach this trend line support. So I think that more upside could come. First target is definitely here, this, and very important.
By the way, if you've seen, Grega, the GDX and the GDXJ have already broken out.
Yeah. I don't have a chart here, but yes, I know that
they've been leading in essence. They're somewhat ahead.
Yes, are looking quite bullish with gold. Yes, I agree. So I think that eventually gold will stay here, at least for the short term, in uptrend towards this trend line. And then let's see if we get a decisive break higher. Also, looking at the 4-hour, I can count, maybe it's a little bit forcing wave count here for now, because I don't have enough of evidence to say that wave 5 really has stopped out here, but I can count 5 waves up. So eventually I will be looking for more upside after any free wave setback. The first support obviously is at 1760. If we take a look on silver, maybe even better picture here. That's your intraday rise here, away from those March lows. It was first 5 waves up, followed by a 3-wave pullback. Another 5 waves up, correction, and a new high. So this makes a very nice 5 waves up. So I think that more upside here could come after 25.60. Also, we had a very nice pattern, and I've been highlighting this. I also posted a chart to chat room, as I remember, 2 weeks back or so. We had a very nice failure breakdown here at the end of March.
Yeah.
Okay. And then not only that, the price has risen after this failure breakdown very sharply above this upper trend line. So that was a perfect bullish reversal signal, because bears couldn't stay here to form this very strong further continuation lower. So actually it was the opposite signal, and this trend line later also proved to be a very nice support. So I think this is a perfect pattern, perfect example that could take us even higher here. If we consider that this is a wedge, well, it could take us back to the starting point of the wedge, which you know where it is. So at least short term, after this correction, I think that more upside here could come on silver. Let me just look at my notes here, what I have left. We mentioned earlier New Zealand dollar, right?
Yeah, New Zealand dollar had a sharper correction lower, but still it looks like it's over.
Yes.
And it's even trying to do some catching up during the past few days.
Exactly. So New Zealand dollar, I mean, here, weekly chart, since we have it clearly bullish. So let's stick with the trend here. Looking at the daily, we have a very nice pullback here for 50% compared to the previous wave 3. Now, the fourth wave pullback normally would be 38.2%. But when you have the wave 3, not so big or extended, but rather wave 1 was the one that was very sharp, well, that's when you can see a pullback for 50% rather than 38.2. But the important is that the substructure was made by 3 waves, so I think that more upside here is coming.
Indeed.
Also, very nice breakout here. Of course, it was too early to say when this breakout occurred.
Yeah, I did the exact same thing you did there. I drew that channel and I said that, you know, I'm monitoring this channel. If we break above it, then probably the correction lower is over. And
yes,
we did.
So exactly. So this very sharp move after this breakout is actually something that you want to see to confirm a very strong
that the trend has resumed.
Higher. So also, what I like here is that in this upward channel, as you can see, the price even is moving beyond that upper trend line. So it tells you that the bulls are currently very strong and could continue higher because they are acting impulsively. Okay. Also, regarding New Zealand dollar, let me just share this one.
Also, if you want to have a look at crude afterwards.
Yeah, I will. So firstly here, why I'm highlighting New Zealand dollar, because since start of April, when we actually have seen those reversal ups on euro dollar, on Aussie, New Zealand dollar, and other dollar pairs, well, since then, actually New Zealand dollar is one of the strongest here. You can see New Zealand dollar, then you have Mexican peso, there is euro dollar, Japanese yen, Aussie, CAD, and pound. So if you want to be positioned long against the US dollar, then obviously New Zealand dollar is something that you would probably look for. Okay, so that's what I wanted to also to highlight with the New Zealand dollar. Now let's take a look on crude oil. So crude oil, I've been looking for limited upside on crude oil recently. And the reason was very simple. I mean, previously we had 5 waves down and the rise was only by 3 waves. So this was Duda zone that I also highlighted it for our members updates on the website.
Can this be a dry triangle instead of a 3-wave?
What?
Can't this whole correction end up being a triangle instead of a
Yeah, sure. Of
Three-wave
course.
correction, because
Yeah, sure.
for the
It
time
can.
being, it looks like it might even be a triangle instead.
Yeah, it can be, but even if it's a triangle, I would be probably looking for price to retrace back into this noisy
of course.
range around 59 or 60. 60 is somehow psychological level. So if the whole fourth wave here would be a triangle, then I think that $60 should not be broken decisively. So,
but I think that one way or another, we can agree that so far the price action we've seen, one way or another, looks corrective. So I'm also looking for, new highs following whatever corrective move we get.
Yes, after this fourth wave is finished. But we just have to be careful that we could see this very strong dip. It's a very similar pattern compared to here back in October. We've been tracking exactly, I remember very well this, exactly the same pattern here, and look what followed afterwards. So just be aware that there could be a retest of this 38.2%, which comes in close to this 100 simple moving average. So this is actually a textbook, would be a textbook example if we go towards 55 and then maybe turn higher.
Yeah, or as I said, a triangle, since it's a wave forward, it can easily be a triangle.
Yeah, it can be. But also sometimes help if you look at Brent or heating oil. I mean, here we have quite nice and strong 5-wave drop, in my opinion. So we really have to be careful. As long as we are here below 67, that we could see more weakness, or at least sideways, as you said. Okay, now let's take a look also on.
Yeah, S&P also looks like it might be forming a triangle, if you're asking me.
Yeah, it can. If we hold this support at 41.20 and we just finish the week here in this range, then clearly that's very possible. It really depends how volatile the US session will be. But eventually, I'm tracking this counter-trend movement on the way up. And also, it's the same thing with NASDAQ 100 here, also observing a counter-trend movement against this 5-wave rise, and even here I will be expecting more upside, probably resumption higher next week. Also, we can, since I have it here, look at Nikkei. Even this one is consolidating for almost 2 months now, so it can be quite interesting.
Everything seems to be more or less in a wave 4, right?
Yeah,
I mean,
exactly.
FX, stocks. Yeah,
exactly. So I think that there can be some interesting opportunities within this current risk on environment, and this could be something to look for if you are looking for any trades against the US dollar. Do I have anything else? Maybe ASEAN, we could mention it as well. So ASEAN is consolidating here. I'm watching potential ABCDE triangle.
yeah, big formation.
But the lower trend line could still be retested. Now, sometimes I get some questions now how to trade a triangle. Well, triangles can be very tricky because they can also occur in a wave B position. So if you think that whole formation is a wave 4 and then you see a spike to a new low, that's why it's very important to wait on a price confirmation. What would be price confirmation in such case? Well, if we are going to see a reversal higher next week, and then we see price close above wave D swing high, then this could mean that more upside is coming within wave 5. In such case, you would place your stop loss beyond wave E. But if you want to play a little be more aggressive game here, and you are going to hunt wave E low, then just keep in mind that stop loss should be beyond wave A, beyond the extreme of this triangle, because basics says that if you buy at the lower side of the range, well, obviously you need to put the stop loss outside of the trading range. If you're paying attention to breakouts, then of course this could be stop loss a little bit higher because you're waiting on a break out of the range. Okay. So do we have any questions? Or
Yes.
I can take a look on Bitcoin as well.
Yeah, cover Bitcoin first, since we've had this like massive move lower.
Yeah, I will.
And then I'll
stop
pass on
share,
some questions.
share and share. Okay, so here is Bitcoin. I was looking for new highs and then a reversal lower, actually based on two different interpretations. I'm not sure if I covered this in past webinars.
Yeah, me too. My first interpretation was that this whole move higher was an ascending, an ending diagonal in essence.
Yeah, exactly. So actually both
This one,
waveforms
yeah, that
back
was
in
my
April
interpretation.
suggested that we are going to see more upside. We didn't know how far, but back then it was obvious that that uptrend is incomplete. But we knew that final leg is coming. Of course, sometimes final moves to a new high could complete the uptrend very sharply with very extended moves. This could be very common on cryptocurrencies. Very common. This is also on commodities. But what is important right now is that we are seeing a very strong reversal, very strong drop below this trend line. This trend line was not only broken, but retested, and we are again moving even lower. So based on two different wave counts, either this is going to be an ABC drop or maybe something more impulsive to the downside. We are likely going to see more weakness. Of course, there will be rallies on the way down, but this will just try to suck in more buyers probably.
Did you say suckers?
Yeah. Suckers, yeah. Also, I will look at this altcoins. I mean, this is Bitcoin dominance versus altcoins. And notice that back in 2017, we have seen Bitcoin moving or doing better compared to altcoins. But despite that, I mean, we have seen this Bitcoin moving to the downside. Okay, so what this means, if this will happen now again when we have Coinbase shares, similar to something that was here in 2017 with Bitcoin futures, well, yeah, it means that altcoins could suffer a lot more.
Yeah, the interpretation for that is that, Bitcoin is like the blue chip of cryptocurrencies. So whenever there is like a big hit in the cryptocurrency universe, people that don't want to like leave the cryptocurrency universe might just switch out of some of the altcoins and pile back into Bitcoin as the, let's call it, safest of the cryptos. You know what I mean?
Yeah. But eventually,
and for example, we've seen it like Dogecoin that was like in the spotlight dropped like 70%, while Bitcoin is down like 20%. So, there's huge difference.
Yeah, so it's a very big risky game at the moment at this stage. I mean, cryptocurrencies, this is probably going to stay here, but if someone is going to speculate here, I think that the easiest game is to be very patient and wait on a deep pullbacks like 50-70% of retracement.
Yeah, and then as we've seen many times in the past.
On next cycles. Okay, so what are the questions? Do we have
platinum, palladium, both of them easy for you.
Trading, we have here commodities.
I think the patterns are quite easy to read.
Okay, let's move forward then.
No, I've covered them, but you're here and people are asking, obviously, for your, set of eyes.
Let me check what I have here. Oh, that's a weekly. Okay, so let's take a look here. I mean, this is a very nice impulsive recovery here, but I think it's quite late of this current rally from March. So maybe we'll see some pullbacks here. I mentioned earlier that we are expecting pullback on gold and silver as well before we are moving higher. So maybe that's something that we could also watch for here. Just be aware of it. I would label like this.
Yeah. But pullbacks should be bought. I think it's quite clear. I mean, we came out of a big triangle, a long-term corrective triangle. We now pushed all-time highs. I mean, what else do you need to?
Yeah, I mean, these strong supports are definitely here. The former wave 4 and wave 4 of 2 lesser degrees, which comes in at these March highs.
Mm-hmm.
Okay. Let me check what we have here. Well, this can be a very big triangle. What's this? Okay, very big triangle. I was looking for a reversal to the upside, either after this pullback that we have seen now in April, or after a little bit lower prices. But looks like that now could be become quite interesting after the next intraday.
Yeah, I'm very bullish platinum actually. I mean, in the long term as well. I think it had underperformed for quite some time gold, and I said it some time ago. I think it's turned to overperform.
Yeah, so I would be looking probably something like that. I mean, it's a very clear pattern here. I think that eventually this market is going to see more upside, I would assume.
Yeah, I've said the same things actually.
1,000 is key level, very big.
It is. That's what I said. I said that even if we don't go higher from here, and we see more weakness, I said that 1,000 to 1,040, in my opinion, is a key area of support, and we should see continuation higher from there.
Yeah, it was retested a few times here, and now
exactly.
Very strong break higher. So yes.
Exactly. Okay. Any more questions, guys, gals, for Grega? GDX. Yeah, okay. He can have a look at the GDX, although I can tell you in advance, it's exactly looking like gold, with the only difference being that it's leading. It has already broken out from its corrective channel.
Let me just try to find where I have this one.
Yeah, it's not hard. GDX, just type it in.
No, I think that I have the wave count.
Okay.
I have it here maybe. Maybe it's here.
So many markets, huh?
Yeah, don't tell me. Okay, I found it.
Yeah, there it is, broken out.
Yeah, so that's what I've been looking for. I also posted this on Twitter, if I remember correctly, back 2 months back or so, that we are probably here just in a corrective phase. I mean, when looking at this substructure, you can clearly see an overlapping drop back to the former wave for a 50% retracement, while the previous rise was very nice and sharp in 5 waves. So I agree with you here. I think that this one is suggesting that we are going to see more upside here, and this is obviously looking very, very interesting for metals in general. But even if we see back move to the downside, I mean, from an investing perspective, would not really be any significant change here. I would still be looking for a correction.
Same
just a matter of time. You really have to be patient here and just give it the time for market to unfold whatever it wants.
And if you have a look at SEAL and SEAL-J, they haven't broken out. So gold, the GDX seems to be leading both the gold market, the silver market, and the silver miners actually.
Yeah, but I mean, eventually, even that one will sooner or later.
Oh yeah, absolutely.
This one, I believe that Stelios loves the idea.
I love the idea as well, trust me. We have another request from Irina. Can you have a look at Rail? R-A-I-L. Yes. No, it's not crypto. Yeah.
Yeah.
I'm assuming the Nasdaq one, Siemens. Yeah.
Looks like this current correction will be deeper.
I agree.
I mean, even the previous rise is not very convincing. Somehow I could try to...
I think the move lower was impulsive, so that means that we should at least have one more leg lower.
Somehow I can force the wave count here a little bit. Let me just like that. Okay. And now you have, as you said yourself, impulsive drop. I mean, it's evident probably here on the lower time frame charts. I would double this like that.
Mm-hmm.
And now you have.
Yeah. So probably lower before we can consider resuming higher.
Yes. I mean, the support is at the former wave 4. And the near-term resistance here is very close.
Mm-hmm.
So I just think that we can expect deeper correction here.
Yeah, I agree. Okay, last chance for the week, guys, girls. Any last question for Gregor? Is that X? Okay, X.
X.
X. Yeah, X. I think the same thing as Rail.
Just a second. To watch. Okay. X, you said.
I think it's similar with Rail. I mean, the corrective pattern is not the same, but I think it's not done moving lower.
Whoa, that's very nice.
Yeah.
I mean, after retracements, even whole pattern, I will not go with such long-term prediction, but even the whole structure here, I mean, we reverse from very low levels here with a nice, clearly identified 5-way structure. So support.
Yeah, lower. Yep. Perhaps this channel can be support, right?
Yeah, exactly.
Yeah. Okay, let's wrap it up with BYND. B-Y-N-D.
Okay, this really appears like a very big consolidation.
A real mess, yeah. A real mess. I wouldn't be touching it actually.
Maybe this somehow will unfold as a triangle at one point, but even if it's triangle or something else,
we might see lower prices. Yeah, we seem to be in the middle. I mean, I wouldn't be trading this, for all the money in the world.
Usually in triangles, we are seeing the subwave 61.8%, not of the previous subwave, but two subwaves.
Anyhow,
back.
to be honest, if you zoom in the price action, this latest little rebound looks corrective to me. So, if I had to trade this in the short term, I think the next move is lower.
Yes, I agree. Okay.
Thank you very much, Gregor, for being here. Thank you, everybody. We'll see you back on Monday.
Yep.
Enjoy. Bye-bye.
See you. Bye-bye.